Let's get to Bob Pisani. Bob?
Down, Carl, but it could be a lot worse. Apple, Pfizer, Merck, some of the consumer names helping us out. But essentially, we're back to that old, slower global growth story, largely due to FedEx. So just take a look at the sectors moving here. And, of course, transports are the weakest far and away. But banks, energy, and metals and mining, there's your global cyclical type names. Utilities holding up better, REITs holding up better, consumer staples holding up better. You know, it looks like the early part of September. Right now. For the transports, obviously, as Carl mentioned, FedEx down about 11%. There's UPS, and you see the logistics guys, J.B. Hunt, Expeditors all weak. Some of the truckers weak, not surprising. I agree with Jim. This is a rather dispiriting report that we saw overall from them. Here's what I want to point out with FedEx. This is the canary in the coal mine. We knew about slower global growth a long time ago. We knew about it back in the early part of 2018. That's how far this stock has gone. It was 30% off of its highs going into today. Now it's 40% off of its highs. But this was not something that the people were astonished about. What was amazing is that they lowered the numbers again for the 2020 estimates, and that's kind of what's got even more people throwing in the towel. But remember, the earnings have been coming down for several years, so this does not come as a shock. You can see the market here has clearly anticipated this. I think people were surprised that they still kept lowering the numbers even after it happened here. We have a lot of pessimism. I know that Fred Smith made some comments about the global economy, and I think that certainly there's something to all of that. But remember something, and I know there's execution issues with FedEx, but he's not imagining things. So the Duke University has a survey out, and they do this several times a year, of CFOs, the major CFOs, and it's amazing how pessimistic they all are. Q3 of 2020, 53% of the CFOs think we'll be in a recession in the Q4 2020, 67%. These are very high numbers. They're not extreme numbers historically, but they're unusually high, certainly in the last 10 years. This pessimism I noted yesterday in the Global Fund Manager Survey that Merrill Lynch does, 38% think we could be in a recession by 2020. That's very high for fund managers. They're usually a lot more optimistic. So why is everybody so pessimistic? Well, the Duke University report cited the usual suspects, the trade wars, specifically Germany, again, being flat to negative growth. And a lot of the fund managers felt that German stimulus would be the #1 thing you could do to help the global stock market. That's how important that is. That's what Christine Lagarde is probably engaged in. And China's slowing down. So you've got a lot of issues here. And my point is Fred Smith is not imagining things when he says that there's really something going on in slower global growth. This makes it hard for the Fed. What are you going to do? U.S. is strong. China's weak. Europe's weak. A little bit of inflation. It's a tough call here. Obviously, the street wants more rate cuts. Just move on. We'll finish with the IPOs. They're still coming out. The important thing is we got one today, a dental supply company. It looks pricing right in the middle of the range, $22. This is Envista. And remember what happened last week with a similar company having a very, very tough time of it overall. So we'll keep an eye. The Fed's going to be the big story today. And as I mentioned, it's a very, very little tough needle to thread here, satisfying the markets.